comes down to computers communicating.
The information superhighway can be a confusing mix of on-ramps and off-ramps.
Bitcoin is worthless artificial gold.
Is it still rat poison?
Probably rat poison squared.
We need to get into the world of, okay, this is actually foundational technology.
What the Internet of Money does is it creates a single network which can do a microtransaction to a gigatransaction.
The Internet is going to be one of the major forces for reducing the role of government. The one thing that's missing, but that will soon be developed, is a reliable e-cash.
Hey guys, thanks for tuning in to another episode of Final Settlement. We had an awesome podcast covering all the news, you know, whether it's the new IPOs coming to market, Gemini bullish, or some of the new announcements from the BIS and marking coins tying back to the digital asset treasury companies and, you know, some of the fundamentals that people should know about when it comes to management fees and rent extraction there. Quick word from Onramp. We've had incredible demand and interest from the launch of Bitcoin Dynasty Trust. We recorded a podcast this morning that'll go out Wednesday with the First Covenant team, tying in a little bit more into what we're doing there. I would encourage you guys to check it out. And if you have a lot of questions, thoughts, you can look at our website. It's right there on the top, onrampbitcoin.com. The Dynasty Trust Services page, there's reports that break down how it works. But then also there's a great report that'll walk through a little bit of the savings and the process that goes into it. Again, you can feel free to book a consultation or reach out directly to somebody from the team. Michael at onramp.com is a good example, or Jackson or Cam. All right, on to the rest of the show.
Gentlemen, welcome back to another episode of Final Settlement. Today is Monday, August 18th, 10:25 a.m. A little bit of a later start today. A little dreary in my background. No beach day for me today. It's a little overcast, a little rainy, but great to be here with my co-host Liam Nelson, Michael Tangona. How we doing, boys?
Yeah, this is my sick game. I didn't think I was going to make it. It's my flu game. You know, whatever they unleash the new COVID or whatever. But you got dreary. I got like a little, you know, feeling under the weather. But that means we're just gonna like bring a little extra heat. So we'll make sure to make up for it.
Yes, we will. So I think we're going to start with a slew of news items, deals, IPOs from late last week. We're going to start with Bullish IPO'd last week. Ran up to about $90. It's now back around 65, I believe, but it IPO'd around 37. Cryptocurrency exchange based out of Hong Kong, I believe. And this is, sort of a trend that we're seeing. We'll talk in a bit about Gemini finally to go public as well. BitGo's another on that list, I believe Kraken as well. So we're seeing a lot of this. But any thoughts on the bullish announcement, Liam, perhaps?
Yeah, this is just what we've been seeing. I think that they tried to go public back in 2022, but it failed just because of the market interest overall. Really positive stock performance. But another thing that we've just been seeing overall, and that Bill Gurley's been really on, is just like the inefficient pricing. I think that, you know, market participants and they received shares. Bullish did at $37 and then immediately traded up towards like 70. So unfortunate to see the team lose out on, efficient pricing from going public. But regardless, very positive reaction from, the public markets. I think it's just everybody knows that right now there's a lot of institutional interest in the sector, despite it's pretty much every company under the sun that goes public in the digital asset space is getting some sort of positive reaction. And so at this point, we're just going to see more and more of this and in very early days of it.
Yeah. I mean, I think it's positive in the sense that from a pure technological entrepreneur startup, getting liquidity, you've been grinding no matter how much we think or don't think about crypto. It's a positive sentiment to be able to, get to the public markets, them get exposure to your company. With that said, I think it's actually a really good podcast. Not really good, but they touched on this in the private and public markets. Really bad for the private market, specifically VC and on the All In Pod. And it was relating to like a lot of these companies, you can just wait for them to IPO. And if you know how to pick the winners, obviously I forgot what they were talking, like Palantirs, the Facebooks of the world, you can really get a lift. And what I'm taking from that and what I'm relaying here is like, if you really like the company, if you think you'd use them, if they have solid fundamentals, like, if you like your equity, if you like your store value parked in, the S&P 500 or whatever, then maybe there's a company out there for you. But would it be bullish, and what do they do? Who uses them would be my question. They spun out of Block One, which had its own, interesting originations back in the 2017 ICO bubble. I think they is it 210,000 BTC? Was it that large?
170, I'm pretty sure.
170 still, just like that is an insane number. At the time, it wasn't even that, it was $1 billion, I think, maybe roughly now, whatever that would be. So anyway, it's just interesting dynamic. I think the core sentiment is you're just going to see everyone under the sun in the crypto space. It's almost like AI. It's like, look, we could tap liquidity. We have the tailwinds at our back in the sense of people think this industry's hot. They want to be able to express a view to it. And so this is just something we're going to see, and mainly just be careful if you're, trying to park capital here in a long-term buy and hold.
Well said. One other interesting aspect is the company went public with 24,000 Bitcoin too. They also clarify in their S1 that they also own some wrapped Bitcoin as well, which I believe, based on my preliminary reading, that they consider the wrapped Bitcoin as Bitcoin on their balance sheet as well. Important clarification. And yeah, to your point, it's interesting to see in terms of digital asset sales, which is, the primary revenue stream for the business. It's flat from 2024, the first 3 months of the year, to 2025. Interesting to see that despite the slew of interesting, how much higher Bitcoin is and all the other digital assets as well. They're institutional focus. So just, interesting to see them not really growing quite as much as the industry at whole.
Yeah. Another sort of trend following announcement that broke earlier this morning. The Dutch crypto company Amdax is going to do a Bitcoin Treasury company strategy. So, Michael, you had sent this one over via text this morning, targeting 1% of the supply. So everyone's going for all the Bitcoins. Everyone's going to get 1% of the supply, allegedly. Any thoughts on this one, guys?
I didn't think you were going to pull it up. I thought it was that funny of a joke. It kills me. We're going to keep talking about it, but I guess we have I think the kicker is when we go back, the Bitcoin Treasury craze will be looked at as like the most fiat thing that has ever existed. Because at the end of the day, when you really break it down, is you're just selling one Bitcoin for 90 cents, or you're selling one Bitcoin, one Bitcoin for 1.1
$2 to $10,
or you're selling, and we'll just be like, what were we thinking? And I guess like if you're going to pull this up, you can go into the Treasury market or the research from BitMEX, because like very few people have looked at the management teams, the advisor agreements, and BitMEX had a really good breakdown of Treasury company advisor agreements, looking at just some. Won't go too far. I think I had them written somewhere, but ultimately it's like anywhere between 1.5 to 2.5% annually management fees that go to these management teams. There's one, again, without naming names, you can read all this, that the company gets exposed to 85% of the Bitcoin appreciation, and the other 15% goes directly to the management company. And then obviously on Twitter, you see no shortage of kind of where these salaries are coming in from, leadership. It's just a grift. It's a huge money grab. And like the reality is, because there's multiple layers to be able to pull it down, where like if you really had a fundamental business, you would just pay it all in stock, and then you don't need the cash. And then also, if you were really building a fundamental business, you would use that cash to provide additional value. It wouldn't go to like just the whole thing doesn't align with fundamental value, and ultimately fundamental value being delivered. So anyway, I thought this was a good write-up. Goes into obviously some of the other crypto DATs and Solana, and they're all equally. It doesn't matter if it's Bitcoin, crypto, hyperliquid. There's a story ton. I think the sad part is this is just getting started. This is going to go much higher than we, I think, are expecting. I think we're just kind of in a mini lull right now for the DAT craze.
Yeah, no, it's well said. And, particularly on the sort of DAT side outside of Bitcoin, what this all strikes me as is just like a way to effectively like re-ICO all these altcoins just in the TradFi world. So in a TradFi wrapper, and just do a very similar sort of pump and dump to insiders who get in early on the deal, when there's actually nothing fundamental either from a business perspective or even the underlying token. And so I would also agree with you. Like I do think this can persist longer than many anticipate, despite how insane it already seems. Maybe slight transition to a few other announcements from last week, more on the mining side of things. So Block finally they've been working on this for a few years, but they came out with their mining hardware. This is called Proto, and pretty big deal, I would say, in my mind, just in terms of, historically in the Bitcoin mining space, there's been a concern or general risk that a lot of the vast majority of the manufacturing of ASICs is in China. And so Block took it upon themselves to effectively build out from scratch a mining hardware business as sort of one of their many subsidiaries that are sort of Bitcoin focused. Any thoughts on this one, guys?
Yeah, manufacturing mining hardware is a very difficult business, and the biggest players in the space have been around for a long time and just have a ton of capital, which is essentially what you need in order to be competitive. It's very capitally intensive business. What's most interesting here, and has been an issue for the industry for a long time, is the modular. It's modular in order to kind of swap, repair all of these ASICs as they continue to depreciate over time. There's a lot of repairs and changes that happen within the industry. And this is going to be very positive in terms of, or it sounds very positive in terms of the actual changing and repairs for the infrastructure. We'll see how well it actually goes out in terms of, the deployment and everything. But the other most interesting aspect too is that they're planning to open source all of the firmware, which historically has been an issue with respect to the mining manufacturers. And Block as a company in total just seems to be really leaning into Bitcoin as a whole. They have now Square rolling out to all the merchants. Proto Rig is a competitor to Bitmain, Micro, BT. They're really leaning in and obviously stacking Bitcoin themselves, an exchange, hardware devices. It's good to see, and hopefully the announcement and the adoption of it continues to be as strong as the announcements, because we have seen, unfortunately, a lot of these announcements that have kind of not come through quite as well as many of the industry participants really hoped. But very positive to see, at least from a design perspective.
Yeah, I don't have a lot of insights on the mining side outside of what Liam touched on. The modularity is pretty interesting, and the take is that what you would take in a 2 to 4 year depreciating asset, you can extend to 10 years by being able to switch out those boards. So in theory, it sounds more efficient. I think Jack and Block are an incredible company. I think they're definitely net positive for the space, everything that they've done, from Spiral to the Cash App integration, being one of the first, with Bit, I think at the Bit license, but being one of the first to offer like a Bitcoin only exchange back in like 17. The thing that I'm most interested or want to call out is where they'll succeed in any of these sectors in a vacuum. Meaning, it's my fear that there's such a large company that it's really hard for them to start from ground up, because that's effectively what you're doing, is starting from ground up to build like an area. It's not like Google started in search, has a very had a very strong hold there, and they could start to like filter into these other products that were tied into search and the internet. You think about Chrome, and Chrome naturally served the browser from search into Google search, where you see like the hardware device is a great example. At face value, it may look super interesting, but anybody that's like shipped hardware devices, onboarded individuals, and specifically collaborative custody, it's like not really a great product for 10 different reasons. And it's something that would come from a company that would have, billions of dollars at their disposal, because I was also at Google, and I understood like those are well-meaning individuals, but it's very inefficient when you have 10 layers of middle management planning different products and services and doing, user testing versus like truly being focused. And so that's kind of my take, is just like, I wonder how much, even all the way down to the terminal stuff, because the terminal exists, in the sense of like Cash App, the application, the terminal, and that there's the perfect synergy there. But like, do they really have, whether it's the will, the connectivity to go out and get millions of users to start adopting it? Now, the counter to that is Jack is, world-class entrepreneur. I don't know how many entrepreneurs have run publicly traded companies, 2 CEOs. He could be playing I know he's playing a long game, because this is all setting up for, multi-decade Bitcoin exposure. So I don't want to discount and say that couldn't be a master plan, but it's just something that I think about when I see a lot of these updates come out. It's like, when I look at, if there was a singular company singularly focused on what Block is doing, they're not doing anything like best in class, and somebody else will go out and run them if they were focused solely on it.
Yeah, it's fair. Maybe just one other mining related announcement, and then we can move on. But TeraWulf signs 200 plus megawatt 10-year AI hosting agreement with FluidStack. This is notable just in the sense of, again, sort of an ongoing trend that we've seen is either Bitcoin miners getting into AI data hosting, or the other way around. And so you're sort of just seeing the merging of these two fields, Bitcoin mining and AI infrastructure. And Google was a part of this deal, backstopping $1.8 billion of FluidStack obligations. And so this nets out to, Google being involved. I think 8%, they have an 8% stake in the company. And I think I saw a tweet this morning that is now actually 14%. They upped it. Any thoughts on this, or we can move on?
I guess just at a high level, Bitcoin mining is not great for economies of scale for the most part, and AI high performance compute is. So it's just natural that larger Bitcoin miners are going to shift more into that industry, just given their ability to source low cost electricity. So it's just something that we're going to see more of. Other than that, no real insight that's differentiated.
Yeah, the only thing for me is just the fascination between mining, AI, and general, technology. Like, you think about these things 2 or 3 years ago, it was generally disparate and they were segmented. And then AI started to really, take a stronghold when it came to compute power. And then you saw, co-location, and then natural buying. And I can't help but think there's going to be increasing synergies as you go through it. Now, the interesting part is like the AI models, and my understanding the way that the cycles require 100% uptime. It's not like mining where you can shut off, but this still concept exists that the miners are like the cockroaches, at least in Bitcoin mining, that they're out there. They're the canaries in the coal mine looking for the cheapest cost of energy. They're like the wildcatters, and then everyone else comes behind them. And so, it'll just be interesting to see how they play out. I think part of a big mining deal that just happened over the weekend as well was Galaxy. It wasn't even mining. I think it's AI infrastructure. It's a big facility down in Texas that they signed. I don't even know exactly what the headline was, but it was for a sizable power plant in Texas between Galaxy. They had like Novagrads down meeting with Governor Abbott.
Yeah. Slight transition back to sort of IPO world. This one was fairly startling. people called this out on Twitter. These are pretty bad numbers coming out of Gemini. Unprofitable 2024 for a crypto exchange. How? Someone replied to that. Am I reading this correctly? 140 million in revenue in 2024, and they spend 130 million on salaries. There's a lot of ways to unpack this one. I think what comes to mind most for me is like something we've sort of known and talked about a bit on the show is like retail really isn't here. And these numbers would support that in the sense that, entities like Gemini are primarily retail focused businesses. And, having myself worked at Coinbase for a stint, I saw the business model of retail focused exchange firsthand, and the underlying incentives at play there, which are effectively, they make the bulk of their revenue from getting people to trade and really pushing them out the risk curve and getting them to speculate on all these, the long tail of crypto assets, and making the bulk of their money from trading revenue. And so interesting to see, but I think this is just indicative of what we've all sort of felt, is that like retail really isn't here. There's, marginal institutional bidding. There's the Treasury companies, the DATs now. But by and large, it feels like retail really isn't here. But there's probably a few other ways we could unpack this one. What are your guys' thoughts?
Yeah, I mean, one of the main ones is we're still kind of in a mini crypto Bitcoin bear market, at least for companies in this space, because to your point, something we just felt anecdotally, that retail isn't here, and the retail that's here has been stepping in. We had James Seyfert on the pod last week explaining about 700% of ETF inflows have been retail, and then the Bitcoin Treasury companies as well. And so when you look at whether it's a Bitcoin only company that's doing exchange, or a crypto, exchange, Kraken, Gemini, like even though the price is sitting at, close to all-time highs, between like MicroStrategy and this like constant bid from large buyers, there hasn't been the natural retail bid. And then usually in the markets for exchanges, the retail bid for Bitcoin, as Bitcoin grew, then it naturally flew into alts and then trading. And so that's just one core component I don't think enough people really appreciate. There's a lot of companies still bleeding out there. And then it ties into unit economics. And this is really just kind of like fiat bloat one-on-one, whether it's traditional tech company or crypto exchange. There's just a recognition or unrecognition of how to build a business in these companies. This tweet that Brian pulled up is, am I reading this correctly? It's 140 million in revenue in 2024, and they spent 130 million dollars in salaries. And it just really ties into, as you build a business, you naturally have to compete for talent. And there's generally two ways to compete for talent. You can give them more money, and that's effectively mercenaries, or you can, effectively give them more meaning. And for oversimplifying, and you can actually have a sustainable, viable business that makes a difference. And then those people, at a certain point of capitalism, like you naturally will almost do anything. You don't necessarily need more money. You need something to like be able to make a dent. There's a lot of things to go further into it. But point being is like these exchanges are mercenaries. And so they have to go out, and a lot of these companies are. And so they have to go pay these $200,000, $300,000, $400,000 base salaries, along with crazy bonuses, corporate cards. And that's just the individuals. That's not titling, marketing, other referral spends. I think there were some losses that had to do with the Genesis deal. And so again, it ties back to the bullish conversation earlier. Like, just be careful if you're getting exposure to these public equities, because the name brand in crypto, it's just the same thing we talk about with traditional equities. They're the price to earnings multiples are at insane all-time highs. And do you really want exposure to that? Especially if you're listening to this, you're probably weighing it against Bitcoin.
Yeah, that's well said. I looked at their S1 a little bit closer too, and some of the metrics that they closely follow. It's pretty much all just trading volume and futures volume. So that's grown to like 50% for the industry from 2020 to 2024, which is when their latest S1 comes. As well as, interestingly, in 2023 to 2024, we were in just an absolutely raging bull market for Bitcoin. There's, I think that year it probably doubled or went up even more than that. I think it was like 42 to something even higher. They're monthly transacting users went up 14%. And I was shocked by that. I was like, all right, well, they had their whole issue with Gemini Earn and thought that, maybe it's just an issue or they're underperforming the industry, but went and looked at Coinbase as well, and they had the same exact numbers. And it's pretty much similarly like 14-ish% so far the first 6 months of 2025. So a lot of the things that we've been saying about the lack of new users in the space is just driven by, the industry overall, I think, doesn't have a very good brand after everything that happened to FTX back in 2022. And, everybody still just generally thinks the industry is a scam. We've seen one of the new 13F filings of Brevin Howard taking, over $2 billion stake, and Mubadala, or the Abu Dhabi Sovereign Wealth Fund, leaning in a little bit more. So it really is just a lack of retail driven adoption at all of these, crypto exchanges, and just lack of really new industry retail driven participants.
It's awesome to see you went through that, and that's a fascinating insight of the, kind of ties it provides the data backing what we've said anecdotally about retail not being here. I think a lot of this ties into where there's a huge opportunity in this space, whether it's from investors on our side or if you're an entrepreneur, and having the focus. Because one of the at least my understanding of where Gemini came about was the Winklevi having the Bitcoin that they held, trying to get an ETF, because I think they actually wanted to park their Bitcoin in the ETF and seed it, I think from a custody perspective. Ultimately, the SEC coming back and saying, hey, custody is a problem. So they had to build an exchange. And then they went down the rabbit hole of, well, we're doing things the right way. If you guys remember back in 17 and 18, they were I forget what the slogan was. Point being is that they were trying to do everything, in a certain way. And then they end up getting their clients rug via Genesis. But there hasn't ever been a direction there. There's no direction. Are they for institutions? Are they for individuals? What are they? Are they for family offices? Are they derivatives traders? And the point being is you can imagine how that growth would increase if there was a natural vertical integration of like Bitcoin. Just Bitcoin is the safest technology, right? Like that's pretty powerful, but nobody says that, specifically nobody at scale, because they've had to raise capital or they're all the way down the long tail of crypto assets. So you get the Krakens, the Coinbases, the Geminis of the world. I was going to say like FTX and BlockFi, but they're no longer here. But it was a similar concept that they were selling everything to everyone under the sun. And so you really are all fighting, everyone's fighting over these scraps of this like speculative mania coming into digital asset. You land on the page and you have 101 cryptocurrencies to trade, versus like somebody that built a vertically integrated strong solution on how do you get best in class exposure to Bitcoin? How do you custody it? How do you lend against it? How do you develop IRAs? How do you do all the things that this asset continues to grow? And here's the kicker, it continues to grow at whatever the CAGR is. So your dollar denominated balance sheet actually is increasing with it, while the Bitcoin stays the same and it compounds. And that's how early we are, that this is just foreign. And we talk to people all the time. They're like, that would make zero sense. Like if Bitcoin's the only thing. I'm curious your guys' thoughts on that, because it seems so clear to us, but this is where these companies come into a gap because they're all fighting over all the same degens. And so like, that's how you get 15% growth.
Yeah, I think it's also a function of just general short-termism as opposed to thinking long-term. Like everything you described around, like if they were to have a more dedicated focus around Bitcoin, like that is thinking longer term, because maybe that doesn't lead to insane trading revenues in the short term. But over the long term, you build out financial products and services that are akin to a specific asset which will actually help people preserve value over the long term, versus focusing on everything under the sun, as you mentioned, really going after sort of short-term manias and hype. And that lack of focus, I think, is just indicative of like, yeah, if you're trying to do everything, you're kind of doing nothing. Would be my broader takeaway about a lot of these types of companies.
Yeah, that's exactly right. And I was thinking while you guys were talking just about, what may be the other side of this with publicly available financials. And the only one that I could really come up with was River. They just put out their audited financial statements for 2024, and, they don't have anything for 2023. So it's difficult to compare the growth in total users from them, but I would imagine it's probably higher than 14%. And then just looking at salaries and related benefits at 8 million for River versus 130 for Gemini, it's just completely different. I would imagine that team is a little bit more mission focused on bringing Bitcoin to the world and in a really thoughtful way, and wanting to stack Bitcoin on the balance sheet does have an implicit cost. And so, River's just kind of one example, but every business under the sun should be thinking that same exact way of just, the ability to stack Bitcoin and you should be comparing every single cost that you have versus this returns that it will generate by just holding more Bitcoin, and not just, Bitcoin and financial related companies in general.
Yeah, and I think that underpins why this isn't a buy if you're a stock trader or have a manage a portfolio. It's ultimately the notion of I forgot the exact term, but it's the whole idea of you like throwing good money after bad. Like if a company needs additional equity round, specifically like the private markets, it's like 9 times out of 10, if not 10 times out of 10, they're not going to get their unit economics and fundamentals better after they get more money. And so if they already manage a company like this, getting the public markets is not going to make them some insane efficient company. And we got to do a show or something on this, because I'm kind of like, from Brian being in the private banking space and investing, in I don't know if a Buffettism is the word, but like studying Warren Buffett, it's just a realization of like this whole thing. If you just have a low time preference or 10-year horizon, you can just outcompete everyone in almost any field, specifically here. So whether it's building a business and focusing solely on Bitcoin, or it's just the notion of holding spot Bitcoin, the compounding nature of not touching that asset was just kind of foreign to me. Like you hold it, but from an ideological or whatever it is. But when you go look at the greatest investors of all time, this is how all their wealth was made, is finding out how to be busy while their asset ran. And that's, I think, one of the big aversions for myself on the Pubco stuff. It's just a trade. Everyone is so mired in the like day-to-day, what's the hottest, what's the latest thing. And when you take into account just a simple like selling and taxes, you're already going into the black, let alone everything else when you're missing out on Bitcoin's appreciation. Anyway, so like I think this is like I'm coming about it on the other side of it after holding Bitcoin and not selling or trading it, realizing like this is the fundamental innovation is you literally park it. Anyway,
Yeah.
Brett, I don't know if you
No, that's spot on. And you had shared over the weekend an old clip of Warren Buffett speaking at University of Florida, and I had watched that many years ago, and so I'm glad that you had shared it, because say what you will about Warren and his disdain for Bitcoin and maybe clouded judgment around generally newer emerging technologies, but there's a lot of things that he built his stellar career on that are objectively true in terms of, one, what you mentioned, the long-term orientation, I think is key to outperforming, just generally speaking, whether it's stocks or emerging tech. But the other one that's he talks a lot about in that clip that you'd shared is what we sort of just discussed, which is focus and not branching out to things that you don't understand. And so keeping things as simple as possible, because that's what allows you to have a long-term view on something. If it's easy to understand, simple, like, he talks about the See's candy business, it's a very simple business. The numbers are pretty plain vanilla. And if you could just raise prices a little bit each year, like, he knew that business was going to do well because it had brand recognition, a moat around it, et cetera. And so it's this notion of simplicity or staying in your circle of competence, which I think is super critical and also, relates to exactly what we're talking about. Like if you are trying to service the entire crypto sphere, you can't possibly have a circle of competence across all of these different domains. And it's also not simple because a lot of it is, the vast majority of it is bullshit. And so how could you possibly have an expertise on something that doesn't even have fundamental value? And so you kind of have to play this game where you pretend to know all this stuff about all these things. Whereas then you compare it to like the River example. It's like, well, no, they deeply understand Bitcoin. They're solely dedicated and focused on that. That's their circle of competence. They have a very long-term horizon. And that dedication to the one thing, the singular asset, is actually that's their ability to forecast it long-term. And so I think, say what you will about Warren and the value investing sort of ethos and the disciples thereof, but there's a lot of truth in the things that made them successful that are applicable to this space as well.
Yeah, I mean, this is the notion of really just rechecking your priors, because I had the version of Warren just given you see the clips he has, but in that video, there's more like alpha or value I heard in the first 15 minutes that I probably heard in the past 15 months from anybody talking, even like newer, individuals outside of Bitcoin. It's just timeless wisdom. And to back into how I got there, so there's a really great book called Richer, Wiser, Happier, and it outlines like the top 15 investors of all time. And I forget what the investor was, but it was basically saying that he listened to that video like 15 times or something, like multiple times in a year. I was like, well, I got to listen to it, because why the hell is somebody listening to it for 15 times? And so there was the notion what Brian shared. I haven't even finished it, but the other part was breaking down long-term capital management and how did 16 people all blow themselves up. And he was breaking down how these 16 people were the best in their class, the best professionals. Like, they had every reason not to. And he's trying to understand what brings somebody to play a game where there's a chance that they can lose everything. And he likens it, and I'm missing exactly what he had said, but he likens it to like effectively playing Russian roulette. And even if you have like 1,000 shots and there's only one bullet, and you can make $1 million or $1 billion, by definition, you still shouldn't play. Like, you would never play that game because you can get knocked out. And it just reminded me of custody as a whole, because most people just rely on a single custodian, or they rely on their own self-custody setup. And if that's all your money and you mess it up, like if there's one small chance that a fire or whatever happens, you get hit by a bus and your family never recovers, you shouldn't play that game. But we do, for a number of reasons, and they're more psychological. And that's what made Warren Buffett great, is he managed risk appropriately. So anyway, I think this it's a good example of like just sticking to those principles can do you very well as a person, as an investor or company builder, if you just kind of go away from the noise. The other one I think was Nick Sleep, because that's why this book got, I think, so popular, is because Nick Sleep, one of the best performing asset managers, had never like opened up kind of like I think he had his shareholder letters, but he had never given feedback on like what went into the psychology. And these guys were similar in very concentrated bets. But he also referenced how like they had one Bloomberg terminal, and it was like on the other side of the office, and there was not even a chair. You had to like lean in to like view it, because it was just the notion of staying away from the day-to-day news. We think about like Twitter and all these things. They're literally just like blasting people in the face, moving them out of position, or getting them to think in short-term views, versus like the thesis of Bitcoin has relatively been the same for 15 years. It doesn't matter what happens in the short term. It's doing what everyone expected.
100%. That's very well said. And I think that many people in the space would do well to hear a lot of that. Like, the thesis of Bitcoin, I could go into a coma for 15 years and would be completely unchanged. But there are many people out there who look at the revenues of Hyperliquid over the past month or so and think about how they should be allocating to this space for the next 10 years. And it's just completely out of touch with reality, as well as just like everything related to business building. As you mentioned, it should be, the greatest flywheel is potentially, the adoption of Bitcoin, is from both, users adopting it as their reserve asset and custody, everything to trading it, getting exposure, especially for all the hedge funds, all the products and services that you need around it. The companies like the Blocks and the Rivers are trying to create should be some of the fastest growing areas of the market, just given Bitcoin's adoption and the reflexive feedback nature across all of the other related products and services around Bitcoin. But there are many of these publicly traded companies, especially most of them that are looking to go public, that just haven't completely identified that's the core thesis here, just trying to grow monthly active users and adding useless to their product roadmap platform, rather than focusing on what will be the good part of their core business for the next 10 plus years versus what's the hot aspect for today that they can really start to get some revenue off, but maybe a poor investment of time, resources, etc., just because it's going to take away time, energy, effort, and focus from the core business.
100%. And a few things that you noted in there. It also comes back to competitive forces, right? Like we could do a whole show on why Bitcoin has an insurmountable lead and has really already won in terms of digital store value. And so that is, akin to a moat around a business. There's a moat around digital store value that is extremely hardened, and it's a wide moat, whereas everything else in the crypto space has effectively zero moat, and is going to be continued. There will be continued competition and people making, faster, cheaper blockchains, which are inherently centralized. And so it's very difficult to forecast 10, 20, 50 years out when there are those ever increasing competitive dynamics at play. And so that's, a lot of what Warren and sort of all of the school of traditional value investors talk about is predictability, the ability to forecast long term, and really finding things that have defensible moats, because that's again what allows you to have a long term vision on something. Go ahead.
Before you transition, just it all ties back to rent extraction. Like that's the core idea. Maybe we'll talk about it again next week, but the notion of whether it's like trying to arbitrage daily active users or the DAT stuff, like everyone, and it's not anybody's fault. It's just the nature of fiat. And as you have more dollars inserted, you have people chasing, how do you arbitrage that? You see this at the state, federal, you see this as like medical care, like everyone's trying to get theirs. And so you look, instead of providing value, how do you extract value? And I had a lot of time on my hands this weekend because everyone was sick. And so I was listening to a bunch of pods and catching up. And there was a really good one with, you should have talked, Laura Shin. And there was a guy, I can't remember, if you remind me after, we'll put in the show notes. It was effectively a guy that came from TradFi. And they were breaking down like all of the mechanics with the stablecoin stuff and the relation to like, building their own blockchains and blah, blah, blah. And he was really thoughtful because at the end of it, he was like, I think who wins and what it looks like is really Bitcoin because of its neutrality. And it's like, well, that's obvious, right? Like it's neutrality and it's like this notion that it's, censorship resistant and unseizable. And like, so then you have this like thing that hadn't existed and then where the value occurs. But that again is antithetical and juxtaposed against what people are trying to do is extract value versus try to like lean into it and figure out how to, deliver value around it. And so, I think it's just full circle as we think about like crypto in general. It's like, how do I launch the token, make some money? And then the sad part is that's where people's like reputation comes in because there's a lack of long-term orientation or reputation. And that's the reality we said earlier about trying to sell. It's like trying to sell a Bitcoin for 1.1 or sell a Bitcoin, $1 worth of Bitcoin for $2. Like that's inherently fiat. And that inherently is, it can't persist forever. And so when this eventually happens, that like people's reputations will be burned. And most people don't care about reputations because we have a very short-term mind frame or mindset when it comes to all of this stuff. There's just a lot of like really interesting stuff that like will be fun to. I know you did a great piece of Bitcoin as the ultimate value investment as an ode back to Warren Buffett, but it'll be fun to bring back more of these concepts because for whatever reason they've kind of just gotten pushed to the side when they're like timeless.
I think the one aspect that we're all kind of trying to tie back to is it's better to almost overpay for a really good business or asset like Bitcoin rather than it is to try to, buy what they perceive to be an undervalued asset and try to time that until the market values it properly. Because, a lot of the times the undervalued asset or is just, valued properly, whether it be some of these altcoins out there or these DATs that don't necessarily have a very long-term value proposition to them. And if you, I think most people are just inherently bad traders, especially if they don't have inside information on the token or DAT or whatever it may be. And so it's just significantly easier both for your mind to just focus on what you're best at. If you just focus on, what is going to provide the most value over the long term and continue to focus on that rather than these inherently these businesses and tokens, et cetera, with just poor unit economics and trying to buy them at an undervalued metric and hope that they can turn it around.
Yeah, it's a good point, and interestingly, that is sort of an evolution that Warren himself and other value investors sort of progressed through. Was initially in the early days of value investing in sort of the 80s. There was this notion of like investing in a cigar butt business, which, proverbially like, there's one puff left on the cigar, but it's way too cheap. And so you would buy something like that because it's, quote unquote, a value investment. And effectively he got burned on too many of those and evolved his thinking on that over time to realize exactly what you said, Liam. Like in some scenarios, like it makes sense to not overpay, but pay up for a higher quality business, something that is more defensible, has a strong management team, all of these factors that you would look for in a quality business. And sometimes, again, over the long term, that's a much better bet than looking at a cigar butt type business.
Hey guys, hope you're enjoying the show. There's a lot to talk about today. Quick note from Onramp. I wanted to call out that we had this last week our Onramp mid-year client briefing. We had over 200 individuals that were clients of Onramp and also friends and family that joined. I wanted to share a few of the responses that initially came out before we took a poll to help influence kind of some of the topics we talked about. And common questions came up around: what does Onramp offer beyond custody and inheritance? How does the insurance product work with Lloyd's of London? How does Onramp protect against digital threats? How does Onramp protect against physical threats? How does inheritance planning work? And really, what are the differences between multi-institution custody and self-custody? It was a great session. And if you're interested in learning about it, please shoot us a note, michael@onrampbitcoin.com, hello@onrampbitcoin.com, or book a consultation. We'll happily share that private video so you can get some more information on what we do. Hope you enjoy the rest of the show. Hey guys, hope you're enjoying this show. Wanted to give a quick call out to the Guild by Early Riders and Onramp. We have no shortage of exciting things coming out, whether it's world-class research, the investments that we've been making and will be announcing soon that aren't public, as well as the opportunity to give operators and investors asymmetric information and insights really into what we're seeing, what we're building in the market. There's no shortage of clients and folks that listen to this podcast, our regular podcast, that really want to figure out how they can get involved in what we're building, and ultimately maybe not ready to leave their full-time job, but are thinking about how do they start to allocate and then also invest more of their time into a private network so they can develop what their core thesis will be as their next chapter in it, whether it's investing or operating / building a company. I'd encourage you to check it out and then reach out or just subscribe to our research. We're going to be sending some updates about in-person events, virtual events, polls, and data sets that we're capturing around the industry as a whole. I think there's a lot of listeners that get a lot of value for it, so I felt it would be a good thing to call out. Again, you can always shoot us a note as well if you ever want to discuss or learn more at contact@earlyriders.com. All right, have a great rest of your week, and we'll see you on, don't forget, Scarce Assets this weekend, Wednesday, for the Dynasty Trust deep dive, and then Thursday we have a pretty special guest for the last trade.
But I do want to transition slightly here to Bank of America put out a survey. I think they do this either monthly or quarterly, but this most recent one for August, it's the Global Fund Manager Survey. And there was a few different charts from this circulating on Twitter. This is where we'll start. Marty had put this out, and many others had as well, global fund managers are still woefully underweight Bitcoin. A recent Bank of America studies found that just 9% of managers that responded have any exposure to Bitcoin, with a weighted average allocation of those who have being 0.3% of AUM. So the smart money is still missing the best performing asset of all time over the last 16 years at least. And so here is that chart. But this is, as we were talking about before, retail's not here, and institutions are allocating at the margin, but by and large, they're still structurally underweight or have no exposure to Bitcoin or crypto as it's described here.
I thought it was interesting that part of this, it shows 48% of investors have exposure to gold, 2.2% of AUM. So it's pretty significant difference. Based on, I guess, 5x from 5x exposure from the cohort that had exposure to crypto, and then what is that, like 7x, roughly 7x the size of allocation to gold versus BTC, and it kind of ties into what we've been discussing, that as Bitcoin aligns more with gold from a sound money trade, you're going to naturally start to see these investors get more proportionate allocations. It still has, I think Bitcoin and crypto are too intertwined that these individuals just see all of it as noise and like, what's the next Bitcoin? And there's just, again, it ties back to the education aspect of it.
Yeah, I would also, fund managers are generally very unsophisticated and generally underperform the market, whatever their benchmark is, over time. And so they're going to be the last ones to really adopt this in a meaningful way. It's going to come only once they've adopted it from a personal perspective and their clients have asked for it enough times that they're going to understand exactly how to get exposure. And the V1 is not going to be the way that they will and should in the long term. And so it's really not that surprising to see.
Yeah. And then this ties into, I think we did it on Last Trader with Brahm about Ray Dalio making some comment. I can't remember the numbers on gold and Bitcoin, but it's like, that's what he's saying publicly. That's not probably what his portfolio has. And there's a lot of inertia underpinning why he would say that. In the same way, there's a lot of inertia where fund managers, financial advisors won't position Bitcoin in anything in material amounts because A, they have a book of business. They don't want to lose that book of business because of the aversion to the asset class. And then also, I think there's a lot of fear that if you're, telling somebody to hold spot BTC, it's like, well, why wouldn't they just hold it themselves? Which I think is kind of like, doesn't make sense because there's still a lot of knowledge needed to manage, Bitcoin if you're going to do it for a long time, outside of you're just saying to the ETF. But that's a lot of these things tie into some of the things we'll be doing on the Onramp Bitcoin Trust, because I think, Brian, like that's a huge component of going down this rabbit hole of, just prudence. The trust is a no-brainer for institutional investors, because if you're thinking about a buy and hold, well, then you need to make sure, to that quote earlier about you can't get knocked out of the game. Why would you be willing for Coinbase to go down? It doesn't matter if it's 1 in 1,000 chance that the bullet can be, the trigger pulled and there's a bullet in the chamber. It's that you have to think about this. The problem is that most people, again, here have 0.3% allocation. So it's very speculative. So you're going to custody it in a speculative way, which just, again, underpins just how early we are to this whole thing.
I was just going to say that's spot on in the sense of, if you view the asset as speculative and you're allocating a sort of flyer allocation, whether it's 0.3% or whatever it is, that's de minimis relative to your broader portfolio, you're not really incentivized to think about custody critically, because you're already considering that allocation as being able to be knocked out of the game just due to the investment thesis being wrong and it going to zero because, it was a scam or had no fundamental value. Whereas once you start to see, specifically Bitcoin for what it is, and you allocate more materially to it, you start to think a little bit more critically about the ability not to get knocked out of the game, because you start to realize you're not going to get knocked out of the game due to the investment thesis being wrong. Like, Bitcoin is not going to go to zero. And so the only way that you screw this up is effectively picking the wrong custodian, having single counterparty risk to the point where you could get, theoretically knocked out of the game. And so I think all of that is to say, like, we are very early in sort of the transition of people having, at least in these circles, having material exposure to the point where they start to think about this stuff a little bit more critically. The other chart that I wanted to share from this same survey was one that Luke Groman highlighted. The question was effectively asking the respondents, do you expect the next Fed chair to resort to quantitative easing or yield curve control to help alleviate the U.S. debt burden? And the majority of respondents, 54%, said yes. And the other notable thing here is that, Harnett, I forget his first name, but Harnett is the chief investment officer at Bank of America. And in response to this data from the survey, he said effectively raise your allocations to gold and, again, crypto, not specifically Bitcoin here, but just a recognition again that I think despite how early we are, there is more and more talk and discourse around dollar debasement, inflation hedges, and recognizing that sound money, particularly gold and Bitcoin, have an increasingly important role to play in portfolios, whether that's at the individual level or the institutional allocator level. Any thoughts there?
Agreed. I think it's going to be even more interesting to see all of the speculation about Fed chairs, and as they narrow down the list of Trump's 11 or so that he said that he publicly is interviewing or considering for the Fed chair, what they start to say about monetary policy is going to become significantly more important than anything that Powell does or existing Fed chair members, because it's all markets are forward looking and they're going to continue to see where they expect interest rates, yield curve control, and quantitative easing to go longer term, as well as the continued issuance of short term treasuries versus long term.
Yeah. One thing I did want to raise, Michael, you'd beat me to the punch on this one. I wanted to share this one, but you already had it on the list. BIS proposes grading wallets for permissionless blockchain AML. And so effectively what this is suggesting is that the Bank for International Settlements is thinking through ways to effectively look at Bitcoin and say, hey, this Bitcoin is different than this other Bitcoin because it was associated with XYZ transaction that we deem nefarious. And the reason I found this interesting was because, if you put your sort of tinfoil hat on for a second, there was a whole sort of 2-year period where people were playing around with ordinals and rare sats and developing methodologies to effectively allow you to separate and make, distinctions around this Satoshi versus this Satoshi. This Bitcoin's a little bit different than this Bitcoin. And now the BIS is kind of running with that and doing, nefarious things with it. So, Michael, I don't know if that was your line of thinking on this or if you had other thoughts.
Yeah, I mean, I think just in general, BIS, I think they were behind, or a faction of them was the FATF rules, if you remember, like travel rule and wallets and, KYC, and that was a unelected body sitting somewhere in Europe. And very similar here, I think it's kind of like a barbell approach that when I think about whether it's the ordinals or grading wallets on the use of a UTXO to the other side of the barbell when it comes to centralization via ETFs or Bitcoin treasury companies, in that whenever you kind of just see these tailwinds and this inertia and momentum grow in directions, you kind of want to take a step back and just wonder what's the underpinning nature of it, but also is it conducive to long-term this asset, free floating and doing what it needs to do. And both of these things, I think, completely kind of kneecap. And I don't think Bitcoin will do its thing, and market forces will drive to the outcome, the ultimate outcome. But it still doesn't mean that we have to remain vigilant and kind of call these things out. It's just a ludicrous statement. And we've seen a lot of European governance and forward direction of how they want to effectively kneecap the movement of this asset in general.
Yeah, this is almost something similar to the US dollar. I think there's a statistic out there that 65% of US dollars that are physical have some sort of drugs on them from usage in the past. And if you are traveling with that, and there was an article about a false positive on the essentially dogs sniffing drugs that were on dollar bills and somebody going to jail for it or having his funds seized in the past. And I think that, all money is generally fungible. And so it's going to be something where a lot of people that just don't understand that there may have been something that has been bad with their money that's been done in the past, but it's not necessarily applicable to what they've done and how they've used their money. And it's going to be very difficult for individuals in order to track and understand what the UTXO said or dollars to make that equivalent has done in the past. And it shouldn't be their responsibility to track, what transactions money has been used in the past. And that shouldn't relate to how they use money in the future.
Yeah, I mean, you could see how the angle, though, will naturally get perpetuated in the sense of like Bitcoin has this, stigma of being used for drug dealers and nefarious activities. So they'll naturally tie it to that. I think this really breaks down to the elegance and beauty of Bitcoin and the market clearing forces, because the other side to this that also underpins where this can have somewhat about outcomes is the centralization of like mining pools and the regulated status of them. So when it comes to, okay, if you're able to, mark a UTXO as having some kind of, blacklist or even potential gray list, and then the ability to mine them from a centralized, pool, or get deemed with some kind of sanctions or whatever it might be. But those market clearing forces of miners exist globally. And if somebody's willing to pay more for a transaction, they will ultimately clear and be able to validate and send that transaction, is the thing that I think we don't know how it will work until it happens, but you have the mechanisms in place. And then eventually you kind of like, the best way to beat any of this is the technology. And if the technology works as it's intended to, it'll ultimately be an exercise of futility to mark anything as whatever you want, because somebody will clear it and those assets will still move.
Yeah, that's a great point.
Also,
coming up on time, maybe one more. I think you brought this, Michael, and it sort of ties back to what we were talking about on the mining side of things. AI arms race heats up as startups borrow billions to buy NVIDIA GPUs. And so I think you'd sort of alluded to an analogy here a few years ago when people were borrowing against depreciating assets in ASICs. And so this is a similar dynamic that we're seeing here.
Yeah, I don't know where this came up over the weekend, but it was the notion of startups borrowing billions to buy the GPUs, but then naturally markets starting, it talks about on the bottom, starting to form, or private credit stepping in. I think there was a $500 million facility, references at the bottom, to step into letting startups lend against their GPUs to access liquidity. And I think this is kind of where there's a lot of notion of like NVIDIA in itself being a little bit of a Ponzi, because they do like the financing for the underlying purchase, or they work with third parties. Right there. Yeah. Lambda Labs also raised $500 million special purpose financing vehicle collateralized by GPUs. And yeah, we saw this play out. It was, it's again, fascinating to sit in 2025 and everyone act like 2022 never happened. This is how a number of financiers and large mining companies and publicly traded firms went bankrupt, was because they ultimately lent against this physical depreciating asset. And so naturally, when you have Bitcoin in the collateralized market, that's already super speculative and risky. And you have to have great risk management from custody all the way to not rehypothecating the underlying. But now you have this thing tied to it. And the GPUs are effectively tied to AI's demand where it sits today, because you can see if the market took some kind of correction, whether it's open source nature or other ways that the market forces would start to squint and not be able to see how there'll be a return on capital, these GPUs and the startups get marked down, and then these assets that were lent out get marked down significantly. And it's just a whole flywheel that we're going to see blow up. It's just a matter of if not when. And yeah, there's too much dollars out there. And so again, it goes back to extracting rent, because you ultimately have the demand here. You have demand for AI, you have demand for startups, you have demand for dollars to look for something above the Fed funds rate. And so people are willing to step in, lend those dollars, and have no idea on the other side of it. They're going to blow themselves up and potentially their reputations.
All right, boys. That was most of the list. Any other parting thoughts or comments or news items?
Focus on Bitcoin. Use that as your hurdle rate with your personal investments in business.
My rug.
And rather than focusing on speculative assets and fleeting revenue streams and business lines, I think is the core point that we wanted to get across today.
Yeah, on my side, it's been incredible to see the demand for the Bitcoin Dynasty Trust product. We just finished recording a pod before this with the team from First Covenant to go a little bit deeper into that product. I likened it at the time. It's like finding Bitcoin at $10. It's a no-brainer in the sense that almost everyone will eventually have to come into that trade if you're trying to protect your wealth, protect the ability to move it in a way that's advantage not only to your legacy, but for tax purposes. So yeah, please reach out if you're interested. Just find us on the website. There's a bunch of reports we'll be putting out, and then you can always reach out or view the podcast. I believe it'll drop Wednesday morning. It really goes deep into a lot of the themes and questions that individuals have been having that have held Bitcoin for a while and want to know if this is something that's right for them.
Good stuff. All right. Thank you, gentlemen. We'll see everyone next week.
Thanks, guys.
Thanks for listening to this week's episode of the show. If you found the information valuable, please share the episode with a friend or leave a rating on your favorite podcast app. All the links we discussed in today's show will be in the show notes inside your podcast app. Before we finish, a quick reminder that Onramp Media is for informational and entertainment purposes only, and nothing should be construed as investment or legal advice. Regardless of where you are on your Bitcoin journey, we'd love to hear from you. Visit onrampbitcoin.com/contact to schedule a consultation with one of our private client advisors.